Welcome back. We're talking about China's place in the global economy. Still with us, Zhou Hao is with Tsinghua University School of Finance. Eswar Prasad is author of Gaining Currency, The Rise of the Renminbi. And Yukon Huang is with the Asia program at the Carnegie Endowment for International Peace. Let's get back to the panel. And Eswar, let me start with you. As I mentioned before we took that break, China's currency, the yuan, has been added to the special drawing rights currencies by the IMF. It's now the third largest currency after the US dollar and the euro. What is the significance of that?
It's symbolically very important for China and indeed for the world, because it's the first time an emerging markets currency has been officially declared as one of the elite reserve currencies. But ultimately, it's not what the IMF says or what the Chinese government says that matters. It's what markets think. And the reality is that markets, by which I mean both official foreign investors like central banks, but also private investors, what they need are high-quality renminbi-denominated financial assets that they can easily trade in and out of. Right now, China does not have very well-developed financial markets, especially fixed-income markets for corporate and government bonds. China does not have a fully open capital account, although it is moving in that direction. And China does not have a market-determined exchange rate. So it's only with these things in place that the currency will really become a major reserve currency. But still, China is well on the path. It's already become a significant international currency, meaning that it is quite widely used in trade and finance transactions. About a third of China's trade is already settled in RMB. So in that dimension, the RMB is making progress. And I have no doubt that as China continues with economic reforms, which I certainly hope it does, the renminbi is going to become a significant reserve currency, perhaps even rivaling some of the existing reserve currencies like the Japanese yen or the pound sterling. But is it going to become a safe haven currency, one that investors turn to for trust rather than just for diversification and yield? That's going to take a lot more than economic reforms. What engenders a trust of foreign investors is a broad set of institutions like an open and transparent system of government, the rule of law, as well as a trusted and independent central bank. In all those dimensions, progress has been much more limited. So I think the RMB is going to become a very important international currency. If China plays its cards right, it's going to become a significant reserve currency, but I don't see it becoming a safe haven currency that in any way rivals the dollar.
Zhou Hao, one other issue about the Chinese currency, and that is we've heard allegations, these accusations mainly from the United States, we heard it during the election campaign as well, that the country manipulates its currency, that it's buying the currency of other countries. Does China need to do that? Does it do that?
Okay, so suppose we are all believing the free market. So then we would argue that for China, it's better to float the currency. However, in the past, United States government and perhaps some from Congress or during this election, we hear this voice that you should let exchange rate to be governed by the market forces, but you can only appreciate, not depreciate. This is like saying that you can have the cake and eat it. It's not possible. It's illogical. So we will say that joining SDR is an important step for China to reform its currency, to open capital account. However, whether the currency will appreciate or depreciate will depend on the market, will depend how the Chinese economy is doing, how the US economy is doing, and how Federal Reserve is going to change its interest rate. So we would expect that going forward, the exchange rate will be more and more determined by the market force. However, whether it's appreciating and depreciating, we have to judge it from a fundamental economic performance. That's my view.
Yukon Huang, I want to turn to something else. Now, this is a broader question. The economic model that China follows is sometimes referred to as state capitalism. Is that an apt description, and do you think it's a model that could be used in other developing countries?
Well, you have to look at where China came from. 30 years ago, this is a totally what I call centrally planned socialist economy. It's moved over the last 3 decades into what I call a more market-determined economic system. The bulk of economic activity comes from the private sector. Most industrial production comes from private enterprises. Housing property market is largely private. It used to be all state-owned. Agriculture is largely private. It used to be done by state farms and cooperatives. So it clearly is an economy which is much more market-oriented. But it also has a lot of what I call state-controlled elements. The major banks tend to be either state-owned or state-controlled. A lot of the major resources are in the state's hand. The right to operate in many activities is basically a decision by the government. It's truly a mixed economy. In that sense, it's quite unique. So I see it as a form of state-managed or state-encouraged capitalist model. It's unique by itself.
Zhou Hao, what is your outlook for 2017, given the fact that there is a new incoming administration here in Washington, one that has warned that it might be imposing punitive tariffs on Chinese imports?
I think the Trump team already said that they are not necessarily going to impose a 45% tariff unless the RMB is depreciating 45%. It is equivalent as saying we are not going to impose a tariff. But however, I think given what happens in the designing of Trump's economic policy, which is mostly will be relying on fiscal stimulus and infrastructure expenditure, you already see the U.S. Treasury market, the interest rate of 10-year yield already have risen in the last day about 30%. That's indicating that the U.S. economy may grow faster and the U.S. inflation may go faster. So if that's the case, actually you cannot be so sure that RMB will be depreciating precipitously, because if the inflation, U.S. inflation rising faster, then there's a cases made that actually RMB may be stable given that situation.
Yes, well, what is your outlook for the future?
So there is a great irony in Mr. Trump arguing that China is manipulating its currency, and is making this charge at a time when for the last year and a half or so, China has been losing foreign exchange reserves as it tries to prevent its currency from depreciating so quickly. So if anything, China is doing the US a favor by not letting market forces rule and drive the yuan down. But I think there is a risk in the coming months. Mr. Trump has made the creation of jobs and the notion of bringing back manufacturing jobs a big part of his election platform. Now, many of the things he would like to do, improve infrastructure, improve the productivity of the US economy, these are things that are in the right direction but are going to take a long time. So there is a risk that in order to make an easy win in the short run and play to his political base, he could attempt to get tough on China. And that would almost certainly invite very strident and aggressive reactions from China, so it could easily spiral into a tit-for-tat battle. My hope and my sense is that cooler minds will prevail. And so long as the US economy continues to recover and so long as it continues generating good job growth, I think the risk is mitigated somewhat. But if the US economy does start stumbling, there is a risk that you could have a trade war, which is not going to be good for China or the US in the short run. Although in the long run, it might in fact help China, because if the US starts disengaging from the rest of the world and stops leading in free trade, China is ready to fill in the void. So a trade war, if it does come about, I think it's not good for either country in the short run, but could potentially benefit China's influence in the long run.
Yukon Huang, what is your view? Could China, in some way for the future, spend its way out of the slowdown?
If you spend the way, it has to be sustainable. So you have a cyclical effect that the global economy is depressed. That means you can use monetary and fiscal policy to try to get a little bit more demand than normal. But in the long run, it's basically productivity. And productivity means China needs to move to a growth process, which is more productive than it has been in the past, less dependent upon debt, less dependent upon investments, more relying upon what's happening domestically. Those are things that were in the policy framework paper that the new leadership came into being, if they can act on some of these issues. And I think one of the points that I think the previous authors are referring to here is you do need a more open economic regime externally. Trade is under pressure, so working on trying to keep that open is a very important thing. Foreign investment is a very important thing. So the bilateral investment treaty discussions between the U.S. and China, I think is going to become a little bit more important in the coming years, particularly since there's such negative feelings about trade aspects. But you can deal a lot with actually some of the economic issues through discussing a more liberal international investment framework.
Okay, we're going to have to leave it there. Thanks to all of you for joining us. That's all we have time for, but the conversation continues online. Chat with us about this or any other show on Twitter. We're at CCTV_America. We also use Facebook. Find us at facebook.com/CCTV America. I'm Anand Naidu in Washington, D.C. Thanks for being with us.